Inflation in Canada has gone to 4.8%, the highest in the last 30 years. Two things came out significantly higher. Number one is the food pricing, and number two is shelter. Food pricing, we know it's global supply chain disruption, but shelter pricing is locally impacted. Now, CPI is suggesting that the shelter price has gone up 5.7% compared to last year. But we know Canadian housing has gone crazy in the last 12 months, and we saw nationally the home prices has gone up 17.7%. So how accurately CPI is estimating the shelter cost? So we are going to question that number. Plus, Bank of Canada is going to announce their monetary policy update this Wednesday, January 26. Are they going to announce their first rate hike, or are they going to delay until March? So we're going to talk about all of this. Let's dive in. If you are new to my channel, my name is Yasin Nizami, and I make these videos to educate my audience about real estate market in Canada, investing, macroeconomics, financial education, and I am also in technical sales, so I share some sales strategies in regards to how tech industry works. So if you are interested in any of those topics, feel free to subscribe and put your comments down below so that I can improve my content on going forward basis. In this video, we're going to talk about the inflation scenario in Canada. While inflation is pretty much everywhere, we saw US publish 7.2% last month, and Canada, Stats Canada came up with 4.8%. To be honest, I don't believe it, but that's official number, so we have to work with that. But according to CPI published by Stats Canada, two things came out significantly higher: food prices and shelter. Food pricing has gone up 5.4%, and majority of the food that has gone up in prices, it is imported from international markets, primarily in US. Now, keep this in context when federal government has announced banning the non-vaccinated truckers coming from US. The US has a major problem between vaccinated and non-vaccinated, and I think a rough estimate says that 50% of US population is still non-vaccinated. Now, if you apply that methodology, you can assume if the 50% of the truckers coming from US are non-vaccinated and federal government is banning them, who's going to bring the food from other countries, primarily in US, in Canada? So you can imagine how worse this situation would become, because if we have no truckers to bring the food in this country, the food prices in this country will continue to go up, and we will see a significant food inflation in coming days. Already this trucking industry is struggling with labor shortages, and putting this vaccination mandate is going to make things even worse. So that's the inflation with regards to food. Now, going back to shelter prices, according to Stats Canada, their estimation in terms of shelter pricing has gone up to 5.7% compared to last year in December. Now, the way they calculate shelter pricing, basically they do a survey and estimate the monthly rent paid by the tenants, and somehow they calculate the shelter price, right? Contrary to what we see in the Canadian housing market, the national housing market has gone 17.7% according to Korea in the month of December compared to last year in December. Right, so it is nowhere near to what we see in terms of the house pricing in Canada, right? So a lot of people believe the CPI numbers published by Stats Canada or any government institutes are heavily underestimated, and this is basically done on purpose, because CPI or inflation number is calculated or used by other institutes to establish, the minimum wage and other welfare benefits. So they want to keep it low as much as they want, or as much as they could. But I think the real inflation is much higher than that. I think it's safe to say the real inflation is somewhere close to like double-digit numbers, especially when the US it has published inflation 7.2%. How come Canada is so low, where we import a lot of stuff from US, especially with regards to food and clothing? So I don't believe that CPI published by Stats Canada is accurate. But anyway, but that's what the official published numbers are. Now, going back to the housing, Bank of Canada is going to announce their monetary policy update this Wednesday on January 26th. Ironically, it's the same day Federal Reserve will also announce their monetary policy update in US, but Bank of Canada is going to go ahead first, and they will publish their numbers in the morning. But the expectation from a lot of mainstream economists and financial experts is that Bank of Canada is going to not announce the rate hike straight away. Perhaps they will wait until their next update, which is going to be in March, and they want to see how the market is going to react, because the Ontario government is going to ease some of the lockdown restrictions by the end of this month. So I think the economy is still struggling, and they may not want to announce the rate hike straight away, but maybe they will say, okay, we will announce the first 25 basis point by March or something like that. So there's a mixed reaction in the industry. A lot of financial advisors and experts saying that the Bank of Canada will announce the rate hike, and some of them are saying they will not until March. But regardless, the rate has to go up, whether this is going to go up this month or in the month of March. But I think the common consensus is that the rate has to go up in order to tame the rising inflation, because the inflation is continually going up month over month, and politicians, especially the federal government, has no chance of being elected if they do not control the inflation going forward. So they have to control the inflation at any cost, and of course they will push Bank of Canada to raise the interest rate if that's what going to do the job. But of course, interest rate hikes will not only control the inflation, it is also going to affect the economy, and of course they will not increase the interest rate all of a sudden, right? So they will basically spread it across multiple rate hikes in the 2022. A lot of experts claim that the Bank of Canada has to at least makes 4 rate hikes in the year of 2022, and by the end of 2022 we will see the interest rate policy rate from Bank of Canada will be close to 1.2 to 25%, and that's the only way to control inflation in this scenario, because when the inflation is so high and the interest rate are so low, you're basically getting real negative interest rate, and the borrowers are basically getting paid to borrow money. So that is going to, of course, effectively change the scenario. And when Bank of Canada announced the interest rate hikes, it's not going to affect the fixed rate mortgages, but it will definitely affect the variable interest rate, because variable interest rate is directly linked with the overnight rate published by the Bank of Canada. So as soon as the Bank of Canada overnight rate goes up, it will immediately increase the variable interest rate as well. So if you compare the variable interest rate with fixed mortgage rate, there's still a significant difference. Even though if Bank of Canada increased 4 rate hikes and it reaches to 1.25%, still it will be cheaper than fixed mortgage rate, what we are seeing in the market. So I think the people who are borrowing mortgage on variable interest rate should not worry too much at this stage. But if the rate goes up and if the economy is able to absorb the rate hikes, which is going to be very interesting to see, then perhaps Bank of Canada will continue to go to increase the rates on a gradually basis. But I think they have to see and assess the impact, because what we saw in US, soon as the federal government announced the rate hike program, the market started pricing in. The stock market crashed, the cryptocurrency crashed, all because based on the prediction or the news from Federal Reserve that they are going to taper their asset buying program, plus they will also going to increase interest rate as early as from March sometime soon this year. So we're going to see the similar situation in Canada. As soon as the rate hike starts happening, the market will react, and the Bank of Canada will have to reassess their situation in terms of keeping the rates low or slowly increasing, or maybe they will have to decrease it back if the economy is not able to absorb that. So that's all I wanted to say this week. Feel free to let me know what you think about the economic situation and the housing market in Canada, and let me know what you want to see next time. So I'm more interested to see your feedback, and let me know what you like, what you don't like, and I will see you in my next week video. Take care.